Hello and welcome to The Inside Basis, Unleashing the Power of Tax, a podcast from global law firm K&L Gates. Each episode looks through the lens of corporate tax law to examine current issues impacting business. We hope you enjoy the discussion. Please reach out to suggest topics or guests or with questions about corporate tax law.
Hello, and welcome to the Inside Basis, a tax podcast brought to you by K&L Gates. In this episode, we're going to talk about the increasingly important topic of tax insurance. And we have with us here two thought leaders in the field of insurance, one of our own from K&L Gates, Marion Zeller, who's counsel and head of tax at K&L Gates, Fulkirk in Luxembourg, and David Mussche, Associate Director of Tax and Contingent Risks at Howden, which is a leading insurance broker in Europe. We have them here to talk about why tax insurance is becoming essential in today's complex global tax landscape and how it can function as a tool for managing tax uncertainties. To start, Marion, can you give us a brief overview of the main tax challenges you see clients facing today?
With pleasure, Andy, and thank you so much for having us today. Since few years, we are observing an increase of tax transparency requirements and a deep evolution of international tax policies, mainly coming from the base erosion and profit shifting action plan, so-called BEPS action plan. Governments are also becoming more aggressive in their tax collection efforts. This is putting a huge pressure on taxpayers to comply with a fast-shifting and complex tax landscape. I think taxpayers are under constant pressure to stay informed and react quickly. Many companies struggle with the lack of clear guidance on new tax concepts. Think of ATAD or Pillar 2 regulation in Europe. It's just a nightmare. So clearly, there is today more than ever an increasing call for tax hedging strategies in order to mitigate the tax uncertainty of the post-BEPS area.
And in practice, with limited certainty, with limited guidance, what are companies doing to address this?
Anticipation. To be able to take appropriate actions on time, taxpayers need at an early stage to be able to identify tax trends, anticipate tax changes, and quantify the effects of the tax risk. A wide range of solutions already exist, actually. You can implement an internal tax risk management process, allowing to identify and assess risk. You can also rely on the contractual allocation of such risk between parties. You can also try to manage them via the granting of tax rulings. In practice, however, we note that tax rulings are today more complicated to obtain, and a contractual tax risk allocation does not always provide enough or proper protection. This is also not always a suitable solution, especially when you want to maintain a good commercial relationship with your investors. So in short, it leaves a gap. That's where tax insurance may step in.
That's interesting. And from the perspective of the insurance industry, how do you see this, David? Can you tell us more about Howden and your work?
Absolutely, and thank you, Randy. Howden M&A is an insurance broker. We have a specialist team of multidisciplinary advisors that provide global insurance solutions across banking, private equity firms, large corporations, asset managers, etc. And our mission really is to be the go-to broker for the design and execution of bespoke risk transfer solutions, including warranty and indemnity insurance, V&I insurance, and tax and contingent risk insurance.
And what's your role on this team? What do you do for clients? How do you help them meet their goals?
I help clients manage their tax risks through insurance, whether they're looking to release trapped cash on their balance sheets or secure favorable tax treatment for specific transactions, or even trying to ensure an ongoing audit or litigation. My focus is on the Benelux within the team. Within the team, we have other specialists for other jurisdictions, and that distinguishes us from some of our competitors that do not have that local tax expertise. When we do work in close cooperation with our warranty and indemnity team, so our W&I team and other specialists in areas like title insurance or environmental risk solutions. And as a broker, we are there from start to finish in the process. It starts with an email or a phone call, and it ends with a policy that has incepted. We as a broker, we know the insurers, we know the market. We've done a lot of negotiation with them in the past. So we do know how to negotiate to have our clients get adequate insurance, but also at a correct price. And then lastly, where we as a broker also assist is with claims. And we within Howden do that at no additional cost.
And I understand that Howden recently grew. Can you talk about what you've gained from the acquisition of the United Brokers portfolio?
Yes, absolutely. Our acquisition of the United Brokers portfolio really helped us to speed up the entry into the Luxembourg market, which we deem a new and important market in Europe. We are already seeing significant interest from clients. And partnering with Jacques M6, I'm sure that Howden will continue to develop a retail business in the country. And that's what really reflects Howden's strategy to invest in experience and partner with culturally aligned firms to expand a geographical footprint into local markets for the benefit of its clients.
Thank you. Marion, can you talk about why clients are looking at tax insurance, what some of the advantages of it might be as compared to traditional processes?
Sure. So basically, a tax insurance transfers certain risks associated with a potential tax issue to insurers. From a practical perspective, it provides a greater certainty from a financial perspective, but also a better way to manage commercial negotiations. Tax insurance is a very flexible tool which can cover a wider range of risk than traditional tax rulings, including, for example, those that are under audit or even in litigation. So if a taxpayer has a favorable court decision, but the tax authority appeals, tax insurance can help by locking in that favorable outcome. At the same time, it is helping taxpayers with cash and liquidity management, for example, by eliminating the need for escrow. So this is a quite interesting option to be kept in mind.
A big thing that we've seen in the market, Marion, is just the time difference. If you were to, for example, seek a ruling on a product versus tax insurance, you might be able to be more comfortable with the risk shift from tax insurance on a faster pace. Can you talk a little bit about just the time difference between what we might look at from a typical binding of an insurance policy to seeking a ruling on a Luxembourg tax issue?
Yes, absolutely, Randy. To come back on the timing point, it can be a significantly quicker and more efficient process than a tax ruling, in my opinion. I mean, typically we say from first call to inception of the policy, it takes about 2 to 3 weeks in a normal setting for a typical risk. That being said, and it's not good for our health, probably, we have placed risks within 48 to 24 hours in the past. Now, of course, if the timing is really, really short, we have to make some concessions. For example, we can't reach out to the full market. Our discussions on the policy need to remain limited, etc. But it can be done definitely if needed. That being said, each case is different. For example, cases that are already under audit or in active litigation will take more time to underwrite, and without going into detail, require quite some more negotiation during underwriting as well.
And with all those benefits, David, how do you see tax insurance on a global scale from your perspective in Europe?
The way I see it, tax and contingent risk insurance is really evolving in the same way as W&I insurance, so warranty and indemnity insurance. I mean, it has really become, W&I insurance, become some kind of global market standard in an M&A transaction specifically. And I think tax and contingent risk insurance is evolving in the same way. And it's not only there to mitigate the tax risks, but it's also there sometimes to get the deal over the line. Because sometimes without resolving a tax issue, the target is not going to be sold or the fund is not going to liquidate, right? So we see also that the numbers are there. I mean, the product is being used more and more in Luxembourg and competition is increasing, which obviously is good for the numbers. And typically in Luxembourg nowadays for a risk that's I'd say a standard risk between brackets, that we've seen before. The rate online premium is probably going to be around 1.5 to 3.5%. One-time premium on the total limit that is insured. But it can be far less. For example, I recently received terms for a risk which concerned a redemption of a full class of shares. And that one was priced, around 1%. So the market has become more mature, and also the context is right in Luxembourg, with ruling practice becoming less active in the past few years. Now that's the deal side. Outside M&A, we also see more and more tax risk insurance as well. For example, internal reorganizations, whether or not the reorganization is tax neutral, permanent establishments, when people are going to be deployed abroad, withholding tax on future dividends or interest flows on new financing, or even cases where the risk is already under audit or in active litigation. We see a variety of contexts there.
And you mentioned contingent risk insurance. How does that differ from tax insurance products we were talking about?
Contingent risk insurance is in many ways similar to tax insurance in the sense that they're there to solve a specific and identified risk, as opposed to W&I insurance where the unknown risks are covered. Only the risk that the insurance covers is different. For tax insurance, the risk covered is a tax risk. For contingent risk insurance, the risk covered is another non-tax legal risk. In most cases, that risk is a potential or a pending litigation, commercially, where we insure against a negative outcome or potential or pending dispute But goes further than that. The contingent risk team, which consists mostly from litigators, from law firms, they're also looking, for example, in a way to ensure break fees if the deal falls through in an M&A transaction, or to ensure the value of collateral to attract better financing terms, for example.
And I understand Howden hasn't always had a position in Luxembourg. Can you talk us through how you set up there and your expansion?
It has been growing gradually. Tax insurance started in the US, then came to London. After that, we expanded to continental Europe, countries like Spain, Germany, or France. And now we're kind of in a second wave, sort of say. So the next logical steps were the Benelux, Eastern Europe to some extent, and Italy, also a more popular jurisdiction these days. And I mean, Luxembourg is a natural fit to us due to its strategic location and the sheer amount of know-how and business that is there. The market is still young here, but it is definitely growing.
And Mary, do you have any perspectives on how the tax insurance market is developing in Luxembourg specifically?
I fully agree with you, David. Luxembourg is a key market for tax insurance. A lot of recent tax concepts have not received sufficient interpretation or guidelines in Luxembourg attached to Pillar 2 taxes. It's also more complicated today to obtain a tax ruling in a timely manner. And as mentioned, the contractual allocation of tax risk is not always providing an adequate solution from a pure business perspective. This is leaving a clear space for tax insurance to step in my opinion.
And David, you mentioned that the expansion into Luxembourg. What are your other objectives for 2025, and how do you see them aligning with the development of the market in Luxembourg and Europe generally for tax insurance?
Well, I think the expansion of the Luxembourg market tax insurance is my personal objective. I've been focusing on the Benelux, and I think in the Netherlands and Belgium we are becoming an established value. And I do believe there is room to achieve the same thing in Luxembourg. I mean, getting out there, talk to people, let them get to know the product, understand the product, and really be there for insight and guidance. And it ties into our European strategy within Howden to identify those jurisdictions where the market is there and has a potential to grow, and then have local people on the ground close to the market.
Thank you. So it's pretty clear that you both see significant growth in this, and Howden clearly does, expanding into Luxembourg, and Marion taking on this work. What types of advice would you give to companies that are navigating the current environment, that are facing challenges with BEPS and Pillar 2 implementation?
Clearly, tax risks are increasing in our post-BEPS era. Learning about this after the fact is too late. Taxpayers must now implement the right tax hedging strategies to be able to mitigate this new tax uncertainty. Tax insurance may be part of this solution. Please do reach out for a preliminary assessment.
Yes, I completely agree with Marion there. I mean, be proactive would probably be my best advice. Do not hesitate to give your broker to give us a call. Talk about the risk. Have you seen it before? What would the pricing be, the going rate? What were some of the challenges in the past deals? What documentation would we need to provide? How does the process look like, et cetera, et cetera. So we can really help with that from the start, from the beginning. And it's also important, that's the first step, and it does not cost you anything. We as a broker, our goal is to get the deal over the line, but we do not get paid if in the end no insurance is effectively placed. Until you give us the green light to start underwriting with a chosen insurer, there's really no cost to you. So the key message is there. Know we are there to help. It doesn't cost you anything in that initial phase, and we're happy to guide you through the entire process.
Thank you both so much for your insights. It's been a pleasure having you on, hearing from you. Again, this is the Inside Basis, a tax podcast brought to you by K&L Gates, and we appreciate you listening. Thanks again for your time.
Thank you for listening to this episode of the Inside Basis, Unleashing the Power of Tax. To listen to past episodes and receive notices for new episodes, subscribe by searching Hub Talks. That's HUB Talks in your favorite podcast app. Tune in next time for more corporate tax insights.